Welcome back to the show, everybody. Check out these headlines. We got Volante, Ripple Partner, FedNow. We've got David Schwartz, Automated Market Makers. We got the Bank of England, trillions and hundreds of trillions of dollars worth of cross-border payments. We got that and so much more. Anybody can make an XRP liquidity pool. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow us on Twitter and YouTube for exclusive content. Right now, we are at $1.28 trillion market cap for cryptocurrency. It's up 7% right now. Bitcoin now almost touching 30,000 at 29,880 bucks and change here. And we see Ethereum almost hitting $2,000 again at 1958 and change. Tether market cap now has dropped to 81.6 billion plus. We see XRP at 47 cents. It's up 4.9% on the 24 hours, still off by 9.7 on the 7-day. Let's get into this, ladies and gentlemen. This right here is the one and only. It's Joe Indoso, the COO of Link2, interviewed at NASDAQ. Good stuff is happening, ladies and gentlemen. And I tell you this, I want you to listen to this right here. It's not the whole thing. I want you to hear this quick clip.
Link2 provides liquidity in the private tech sector. Founders, early investors, even employees will be able to tap into a company's liquidity before they go public or are sold. So with me is the Chief Operating Officer, Joe Indoso, to explain a little bit more about Link2 and what you're doing with the company. Let's just start with what you do versus the public markets, because you're really in the private market, right? So explain the difference.
The difference is really simple. If you're an investor in the public markets, you can pull any number of brokerage apps on your phone, or you go to their website and select a stock and invest in it. It's very, very simple, very easy,
yep.
Right? That's not the case with private markets, at least not until Link2 came about.
Okay.
It's incredibly difficult to access the stock of the top tech companies while they're still private. Requires a lot of inside connections, and it's a very arduous legal and financial process of obtaining that stock and transferring ownership from an existing shareholder to you if you wanted to invest. We've made it incredibly simple and easy for an individual you still have to be accredited, because that's what the SEC requires, but as long as you're an accredited investor, you can, on our app or on the website, select from some of the top private tech companies in the world and make investments in the same kind of click and invest way that you do with public company stocks.
Yeah, I remember.
And I tell you, it doesn't stop there, because I'm telling you right now, there is no other company like Link2 that works harder to democratize finance and investment opportunities in private equity. Period. Full stop. Yes, there are accredited investor rules. Yes, you have to be accredited. Yes, it is the SEC who put those rules in place, not Link2. And eventually, one day, I think those rules will come down. That wall will come down, and you will see Link2 standing there with a hammer that helped bring it down. They're doing more than any other private equity company that I'm aware of that can provide the opportunities at minimum investment that they do. It is remarkable opportunity. Click that link below. Let me tell you something. PolySign is going to become available at 11 a.m. Eastern Time, 8 a.m. Pacific Time this morning. And it is going to be a remarkable opportunity. They are really rolling out the soft launch of their alternative trading system back end for the accredited investors to begin to be able to exchange and sell and buy these products even when they're not available on Link2's platform. I tell you what, this is an exciting time for Link2. It's an exciting time for me, and I cannot wait, because guess what I'm doing today at 8 a.m. Pacific Time? I'm buying private equity, and it's PolySign, baby. Yeah, write it down. Binance, however, says the U.S. deal, $1 billion deal to acquire bankrupt Voyager digital assets is terminated. And we see here from Congress, it is Ron Hammond says another example that Binance has no friends in D.C. Senator Haggerty out of Tennessee is not only the Senate Banking Committee, on the Senate Banking Committee, but also one of the sharpest senators on crypto and national security. And that is a fact, Jack. He is something to listen to on those subjects. While FTX fraud was a shock to D.C., the same won't be said for Binance. This is what Senator Bill Haggerty had to say. Since December, I have voiced concerns about Binance's ties to China and the CCP. Today's report on their workforce in Shanghai raises yet another red flag about their operations both here in America and globally, and the influence of the CCP in crypto markets. How about that one? There is a road ahead for Binance. Let us not forget on the global geopolitical scale that de-dollarization is very much real and is very much happening. Saudi Arabia, as a reminder for where we're going here for the next few pieces of information to set the tone of why all of these things are important, because we're about to hear from David Schwartz here in a second. But thinking of what is happening geopolitically and through the monetary system and how it's structured currently to what's taking place, Saudi Arabia has expressed a huge interest with a memorandum of understanding, a $15 billion agreement with the BRICS coalition to in fact join BRICS, which would suggest by the actions of Saudi Arabia up until now that they are absolutely starting to detach and pull away from the petrodollar agreement, which elevates the U.S. dollar as the global reserve currency for the world. Now, there are some things happening here to pay attention to, like Volante Tech Strategic Partners forecast central bank digital currencies to lead the payment industry. Now, this is important because Volante is a Ripple partner, right? And I just want to highlight that very quickly here. Volante Strategic Partners for forecast of CBDCs to lead the payments industry. And that is obviously coming, and it's coming in a big way. And we also know, if we go down to this page, just so I can show you guys here, Ripple right here on Volante's website. We view Volante as a critical partner for building Ripple's new real-time data-rich payments network, Swift GPI as well. But I'm showing this because we know that de-dollarization is really happening. We know that BRICS Coalition is growing very fast. We know Volante Technologies is also tied in with the Fed and making faster payments, right? 24/7, 365. So Ripple partner is helping with that. Ripple is also a partner on the U.S. Faster Payments Council. I believe on the domestic level that this is very important in helping to organize the domestic liquidity, because if you don't organize that first, you really, I don't believe, can have the serious conversation about accessing large value, deep cross-border payments until you've done that. Now, that's what I see taking place here. So now, then we go into this news here. Ripple partner Volante joins Federal Reserve pilot program for FedNow, as well as Ripple as well, right? And then we have this news here just recently announced from David Schwartz. I am more personally excited about this feature than any other proposed XRP ledger feature in the past 10 years. And what is he talking about? He's talking about the automated market makers. And he shares here Lachlan Todd's thread, which we're about to read here. And you're going to want every single bit of it. Now, I'm citing all of these things which seem a bit sporadic and spread out. But if we start to look at what we're talking about here, whether it's organizing domestic liquidity, whether you're using XRP or not, because you don't need it in most domestic settlement, but the reality is that they're organizing that domestic liquidity, I believe, to ultimately be able to draw on it for those large, deep value cross-border payments. Now, if we go back to what I showed you here very quickly with the de-dollarization, then we know there is an issue for the U.S. dollar. There is a movement to break away from the dollar dominance around the world. What can help with that? A decentralized ledger, because that's where the value is in the protocol, the XRP ledger. So whether we're seeing organized domestic liquidity take place, right, with Ripple partners and Ripple themselves, or whether we're talking about the ultimate preparation, I believe, for a great financial paradigm shift, greatest one we've ever seen in the history of mankind, yet to come, but it will. I believe the XRP ledger can play a valuable role because it is the first ever decentralized exchange, and it works. And it gets better and better all the time with the recent introduction of the AMMs, which is automated market makers. Looking at this thread very quickly here, you can see that Lachlan breaks this down. No MEV or front running through two features. Federated consensus subset of nodes, the UNLs, agree on transactions rather than a single validator prioritizing based on gas fees. Canonical transaction ordering, it says transactions are ordered in a deterministic, hard-to-predict manner. Protocol native automated market makers are the blockchain level with liquidity shared across the chain. Anyone may create a new XRP liquidity pool. Anyone may create a new XRP liquidity pool. One more time. Anyone may create a new XRP liquidity pool that the whole ecosystem may use. And those building on the XRP ledger can then integrate DEX interfaces without bootstrapping liquidity. Now that is a remarkable point. We're going to carry that in a second here. Stay with me. Single-sided liquidity provision. LPs, liquidity providers, may deposit a single asset into a pool with half of its value automatically converted into a paired asset. Example, deposit $100 worth of XRP into a USDC XRP pool, with 50% of the XRP being automatically converted to USDC to maintain the 50-50 split. Continuous auctions. Arbitrageurs may bid for 24-hour window slots with near zero trading fees. Bids are partially distributed amongst each automated market maker pool, compensating liquidity providers and reducing impermanent loss. CLOB functionality is XRP Ledger's new automated market maker now incorporates both central limit order books functionality as well as automated market maker pricing, with the best available price being executed for any given transaction. Both designs come with trade-offs, but the new AMM has the best of both. This is the full article you can get into here, and shout out to Lachlan for that and David Schwartz for the retweet. You know, this reminded me of this exchange I had back in 2018 when I asked the question, does the transition away from retail that Ripple was making towards institutions mean that we will see retail market phased out? And I asked Dilip Rao, and if so, will XRP holders be able to continue to hold the XRP without restriction? He said, in response, December 4th, 2018, this is how long this conversation's been going here. Liquidity is an ocean with fish large and small, many varieties needed for an ecosystem to thrive and grow. Yes? I was grateful for his comment then, and I'm grateful for it now. And I tell you this, when I come back to understanding automated market makers and hearing what is being said here, that anyone can make a liquidity pool, right? Anyone may create a new XRP Ledger liquidity pool is extremely exciting. But we are still waiting for an SEC judgment to make sure legally that is the case, as well as the technical functionality and capabilities of the ledger itself. I want to see people be able to get XRP in the same manner that I have since 2017. And that is why we're still waiting for the ruling on the case. However, with that being said, now let's look a little further. XRP Darren Moore, you should be following him, says, I invested in this technology as a speculator. The more I educated myself, the more I realized how the technology was going to change the world. I'm looking forward to a world where the friction is removed, where the middleman is minimal, and those costs are put back in your pocket. Global corporates move $23.5 trillion across countries. Wrath of Common recently found out where there are many new ODL partners. Some were not in remittances, but in small, medium enterprise and corporate treasury. We covered that post the other day as well. And here you see what he's talking about, with global corporates move nearly $23.5 trillion across countries annually, equivalent to about 25% of global GDP. 87% of merchants executives see cross-border online sales as the biggest growth potential. The value of cross-border payments is forecast to increase from $150 trillion in 2017 to over 250 trillion by 2027, just 4 years from now. You know, what I see out of all of this, obviously, is the opportunity for us to become market makers. And again, hoping for a positive ruling in the SEC versus Ripple, that anyone who does not hold XRP now would be able to participate just as the technical function allows all of us to today. Now, when I think about that, then I see this. Now, this is also a report here based on what was shared out of this original report. Shout out to Darren Moore for the original link and Wrath of Common. So then I saw in the original report here from the Bank of England, which is a long-term partner here. And this is Darren Moore right here posting this. But shout out to Bank of England, long-term partner of Ripple, Victoria Cleland. Victoria Cleland was the same person who told us back in 2019, Executive Director of Banking and Payments and Innovation at the Bank of England, that she expected a big bang cutover because what you have with real-time gross settlement is the core ledger supporting payments transactions worth hundreds of billions of pounds a day. And we can't have some members on it while others are not. Now, this is 2019 and the pandemic happened, 2-3 years hung up into that. But the goal hasn't changed because you just saw the report there from the Bank of England here. And here is the full report from the Bank of England. You could look at it yourself and the remarks on it from Victoria Cleland. Now, if you go into her article here, as she says here, after talks with the Bank of England internal IT department, it is likely the bank will keep the existing system up and running alongside the new one for a period as a fallback. So if there was any problem, we could recover back to that. Part of the challenge is ensuring all organizations that link to the real-time gross settlement system are also prepared for the cutover. It's not just the Bank of England that needs to be ready. We need to know that the whole industry is ready. And I think that's so accurate and even more relevant than it is today. She went on to say back then that Bank of England set 2020 as their goal to replace RTGS. Again, the pandemic jumped in, delayed all of that, and is now expected to be finalized by 2025. And they may still be on track to meet that goal because that aligns greatly with CBDCs, and we know that that is going to be the instruments that are used to do all of this payment, clearing, settlement, and whatnot to go along with it. So this is getting very exciting to me, ladies and gentlemen. And one more thing here, I want to show this. How do you protect investors when you lie to them? This is what's going on in the United States. While all of this is taking place, we're still dealing with this obvious truth here. Take a look at this.
The vast number of these thousands of tokens, without prejudging any one of them, meet the standard of being a security. And thus the platforms have an obligation to come in, register, work with us.
So we already know in the U.S. and in many other jurisdictions that 3/4 of the market are not ICOs. So we already know in the U.S. and in many other jurisdictions that 3/4 of the market are not ICOs or not what would be called securities, even in the U.S., Canada, and Taiwan, the 3 jurisdictions that follow something similar to the Howey test that we've talked about. 3/4 of the market is non-securities. It's just a commodity, a cash crypto.
Now, I tell you, that's what we're dealing with. A guy who is at MIT who clearly understood that the entire market is not digital asset securities because he was teaching that at MIT. But now in the SEC chair is claiming that all of them are in fact securities. This ruling in this case is so important, not just for Ripple and XRP, but for the entire crypto space. Don't believe that, it's still true. But what I see from de-dollarization campaign happening around the world, organizing domestic liquidity, the XRP ledger being the world exchange, automated market makers introduced to the ledger to make everything better, everything greater, the opportunity for us as big fish or little fish to be able to create a liquidity pool and organize our own way to make money It's always been the end goal here for me, that hopefully someday my exit strategy is not to exit at all, but to potentially create an XRP liquidity pool to help with the system. Not financial advice from me or anyone else. I'll catch all of you on the next one.